Brand new inventory data from Realtor.com shows a massive increase in the supply of homes on the US housing market for sale. This big increase in supply was relatively unexpected and is now causing home price growth to slow and even decline in many cities and states across America. As you can see, folks, this data from Realtor.com now shows that we're up to 941,000 homes on the market in America, up 34% year over year. And this inventory, it's now the highest since January 2020, everyone. So the highest inventory in almost 5 years, and we're now almost back to pre-pandemic levels. And in particular, this inventory growth is biggest in the South in America. We're seeing massive pileups of listings and homes for sale in states like Tennessee, Georgia, South Carolina, Texas, Oklahoma, Florida, you name it. Inventory across the South in America is skyrocketing. With the year-over-year inventory growth across the South registering crazy levels, everyone. We're talking 59% in Florida, 49% in Georgia, 48% in North Carolina, 31% in Texas, and even if we head on over to Arizona and California, we're now seeing big inventory growth of 40% year over year. And later in this video, I'm going to reveal to you the 10 cities where I think prices are going to drop the most due to this spike in inventory using data from Reventure app. But first, I want to show you all the realities of what this higher inventory is causing, that prices are in fact dropping a lot in certain cities and neighborhoods now as a result. Like, take a look at this listing outside of Dallas, everyone. It's a 5-bed, 5-bath mansion. Boy, the houses in Texas are really big. And this house was originally listed for $899,000 in June. It's now down to $775,000 in October, a $125,000 price cut that now has the value estimate on Zillow back to what it was in late 2021. But what's amazing is that we're not only seeing price cuts on these more expensive homes, we're also seeing big price cuts on the cheaper, more affordable homes as well. Like on this 3-bed, 2-bath in Lakeland, Florida, on the market for $230,000. This is a smaller home. It's been on the market for 256 days, and the owner here, he's actually taking a big loss. He bought it for $254,000 in March 2023, and now has it listed for $230,000 a year and a half later. So that's almost a 10% loss. And so I'm just finding more and more of these examples on Zillow, everyone, of houses with big price cuts or where the seller is losing money from what they bought it for 2 or 3 years ago, which is a positive sign for you guys out there as prospective buyers and prospective investors. Things are getting cheaper, they are getting more affordable, even if the aggregate price levels in the market are still very expensive, and if still many sellers are still listing at crazy prices. I want to show you guys something here. We're looking at the home value growth year over year through August. We're going to get the September data soon on Reventure app, but through August. And what you can see is we still have a lot of places with values increasing year over year compared to where they were a year ago. Nevada, Illinois, Ohio, New York. But what I want to point you to is if we look at the month over month home price growth, we see the monthly home price growth declining in seasonally adjusted terms all throughout the Southeast, Texas, Arizona. Not so coincidentally, these prices are dropping in the same areas that have the biggest inventory surplus. And so a metric that you've got to really pay attention to if you're a buyer and investor and understanding the future of the market is that inventory surplus or deficit metric under market trends on Reventure app. This is telling you how many more or fewer homes for sale there are compared to the long-term norm. And you can see the states with the biggest inventory surplus are Florida at 38%, Tennessee at 35%, Texas at 33%. So these are the 3 states, and I've talked about them a lot, but these are the 3 areas where home prices will continue to go down because there's just lots of supply on the market. In addition, we have DC, Colorado, Utah, Washington, Arizona, Idaho, and Oklahoma as states where the inventory surplus is over 20%. And this inventory is continuing to build at a point in time when the buyer demand in the market is still constrained. Very important that you guys understand this fact is that lower mortgage rates and the Fed rate cut has not really stimulated home buyer demand like a lot of people were hoping for. The mortgage rates went down from around 7.8 to 6.1%. And in response, the home buyers just didn't really do too much. And I want you folks to pay attention to this, everyone. This is actually a little scary for the housing market. It's the fact that the mortgage purchase application index, which we're showing on this graph, has only recovered a little bit in recent weeks due to lower mortgage rates in the Fed rate cut. So you can see the mortgage app index is up to 149, which is actually up 9% from where it was a year ago. However, this is still a very low level of mortgage application demand from buyers. Literally, we're still 43% below 2019 pre-pandemic levels in buyer demand, people applying for mortgages to buy a house. And so for this demand to increase more into the future, which is ultimately what you want to see if you're a realtor or mortgage broker, we're going to have to see home prices go down and inventory grow by more, particularly in a state like California. California is a housing market that's been all locked up over the last 2 or 3 years. The prices have continued to go up after a brief mini correction in 2022, which has now caused the typical value of a house in California to almost get to $800,000. Can you believe that, everyone? $800,000 to buy the typical house in California. And that was all due to low inventory. Low inventory constrained the market, it constrained supply, and continued to push prices up. However, now in California, we have some improvements. We can see over the last year, inventory has grown by 40%. So we went from 44,000 homes on the market last September in California to 61,000 this September. Now, we just updated this data on Reventure app. And in particular, we can see big inventory gains in metros like San Diego, where inventory is up 77% year over year. In fact, of large metro areas, San Diego's 77% inventory gain ranks first of all metros in America. So San Diego had the biggest jump of supply. Tucson was number 2. Tampa was number 3. Orlando was number 4. Seattle, interestingly, was number 5. Lots of supply coming on the market in Seattle. Miami was number 6. Little Rock was number 7. Stockton was number 8. Port St. Lucie was number 9. Jacksonville was number 10. You can see very clearly the thing that all of these markets with skyrocketing inventory share is that they're heavily overvalued for the most part. They all have overvaluation rates of 20% or higher, except for a couple. In addition, they're in warm weather climates because there's a segmentation occurring in the housing market right now that is very important to understand. And a lot of the mainstream news reporting on the housing market just completely misses this point. The segmentation and bifurcation that is occurring. We really have a tale of two different housing markets. We have on one side what's going on in the South and the Mountain West in America. And then on the other side, we have what's going on in the Northeast and Midwest. And it's almost as if these two different regions are playing an opposite game in terms of inventory and home prices and what you can expect as a buyer and investor. Let's start by comparing the South to the Northeast. And for clarity, everyone, the South is represented by these states in yellow. On this map, the U.S. Census Bureau determines that these states in yellow are the South, the Northeast is the blue. So we can see here in the South, the active listings are up to 493,000, which is now only down 8% from what it was prior to the pandemic. Basically meaning that the South has now regained all its lost inventory. We're at the same inventory prior to the pandemic, and actually the months of supply on the market's even higher due to reduced sales volume. However, in the Northeast, you can see we're only up to 102,000 homes for sale, when prior to the pandemic we were around 200,000. So we're still down 50% on inventory in the Northeast, whereas in the South we're only down 8. And you can see this reality clarified even more on this table, which breaks out the listing shortage by region. In the South, we're only down 8% on listings. In the West Coast, which is the area in green on this map, which includes the Mountain West and California and the Pac Northwest, we're only down 12% on listings. But in the Midwest, we're down 42%. In the Northeast, we're down 51%. So this is a housing market where there is no more shortage in half the country. In half the country, the shortage is over. In the South and the West, there is no shortage. There's plenty of supply. There's plenty of supply. There's actually more supply than before the pandemic relative to home sales. However, in the Northeast and Midwest, there is still a structural shortage of housing. And so when you hear these arguments that people make about like a national housing shortage or there's just not enough homes or we're 3 or 4 million homes short, understand that that argument at this point only applies to the Midwest and Northeast. Anywhere else in America, for the most part, is not applicable anymore, which has huge implications for the future direction of home prices in America. I would encourage you guys to check out the updated Reventure app home price forecast score for your area. It's shifted a little bit in recent weeks due to changes in mortgage rates and inventory, but in particular, take a look at what these forecasts look like for your city and zip code, because we're still seeing dramatic differences in neighborhoods. We can see here looking at Dallas, we have certain neighborhoods which are still appreciating. Highland Park, University Park, still going up because there's still a big shortage of inventory in some of these zip codes, whereas In a lot of other parts of DFW, you could see inventory is 100% higher than long-term norms, and as a result, prices are dropping and forecast to continue to drop into the future. And so you as a buyer or investor or seller can use that data to help you make a better decision about what to do in the housing market. If the price forecast is really low for your city and zip code, that says values are going to drop. It says if you're a buyer, make offers well below asking price. The sellers are going to be more willing to work with you. Conversely, if an area has a high home price forecast score, well above 50 on Reventure app, that suggests that values are going to appreciate into the future. And if you're a buyer, that should be your expectation, and that you're not going to be as likely to get a below market deal. So access all that data at www.reventure.app so you can make a more educated home buying and investment decision. I particularly encourage you guys, if you're somebody who's going to be looking for a while, sign up for that annual pass, because you're going to get a 15% discount if you sign up for the annual pass. You're going to knock down that monthly cost from $39 to $33 a month. So I really encourage you guys, sign up for that annual pass so you can see how this data develops month over month, so you can be ready to buy at the end of 2024 and especially into 2025 as the market shifts even further.